My next guest says while inflation is coming down, the risk is to the upside. And that is his top risk for this year. Let's bring in Sebastien Page of Rowe Price. Welcome back.
Thank you. Thanks for having me.
We still think that's an upside risk? I mean, it's trending in the opposite direction. Why doesn't that give you comfort that it's going to continue that way?
Yeah, Scott, it's trending down, and housing is building in a disinflationary trend. But I do think the risk is to the upside. I'm not talking about 9-10% like we had, but I look at the Red Sea, shipping a container from Shanghai to New York. The cost of doing that has just doubled in about 4 weeks. Wage growth is at 5%. Atlanta wage tracker. Our research platform is bullish on energy stocks. So I put it all together, and yeah, it's coming down. And by the way, house prices up for 9 months in a row at a pace of about 9% annualized. So at some point, that lag effect turns into a positive contributor.
I'll give you another number that maybe trumps everything, and that's 49.27, because that's where the S&P currently trades, and it's at an all-time high, and the market's looking beyond all that. Why aren't you?
So inflation generally, historically, has been good for earnings, right? So when you get positive inflation surprises, companies have pricing power. It's not really intuitive, but inflation coming down real fast could actually hurt corporate earnings. So I wouldn't equate necessarily increased or unexpected inflation pressures with automatically a disappointment for markets. Markets right now are looking at earnings. They're looking generally at rates coming down. And really, Scott, we've talked about it, the blob of money. The blob of money is still out there.
But how long are we going to be fixated on these long and variable lags, which just may not show up? Don't we at some point as investors have to say, you know what, maybe we're wrong because this time is in fact different? The economy and the trajectory of inflation are screaming to you in some respects that things are actually good. You know what I want you to listen to what Ken Griffin of Citadel said today to our Leslie Picker down in Miami, because it's so relevant to our conversation. We can kick it on the other side. Here's Ken Griffin.
We do look like we have put some of the economic anxiety of Q4 behind us. Good payroll numbers, good GDP growth, and most importantly, inflation is moderating at a pace that's frankly better than the market anticipated. We may get Goldilocks. We may get a soft landing or even no landing. We may be looking at a moment in time where inflation this year is low twos. The Fed can start to cut rates come this summer, and we will see unemployment touch up a little bit, but the overall economy looks pretty damn good right now.
Yeah,
what do you say?
It looks good. I mean, look at what the forecast was at the beginning of 2023. Basically zero growth, 0.3%. Look what we got, 0.3% forecast, 3%, 2.5%, 3% realized growth. So growth continues to surprise on the upside. Scott, we're having that debate in our asset allocation committee. We're right now enthusiastically neutral between stocks and bonds, fully invested at our strategic weights. The bears are still talking on my committee about the long and variable lags. And it's, winter is coming. The debt maturity wall is coming.
Well,
that's the argument.
Winter's coming, then maybe the bears need to go into hibernation because they've been getting run over by a market that just doesn't want to hear it anymore, that this bear story is tired and it's old. And you heard Ken Griffin there, who's pretty damn good at managing the money of Citadel and running that firm to have returns that are unlike most others, to suggest that maybe it's just good.
Yeah, and I think I agree, and it comes down to the consumer and the strength of the consumer. And what's interesting is going on right now with the consumer is that their wages are growing, people's wages are growing 4 or 5%. And as inflation's coming down to 2%, your income relative to inflation is growing. And so that will give continued strength to the consumer and the employment market. I don't agree with economists that keep saying that we're seeing cracks, that the labor market is cracking. I don't see it. Just follow the data, and the labor market is still very strong.